Today, my guest is Richard C. Wilson. Richard is a third generation Eagle Scout. He's also the founder of the Family Office Club, which has over 2,000 registered investors, and his team offers a digital investor platform and sources direct investment opportunities for his 58 investor clients. And in just a minute, we're going to speak with Richard about what the ultra wealthy are seeking most often. But first, a quick reminder, if you like our show, CREPN Radio, there are a couple things you can do to help us out. One, you can like, share, or subscribe. And as always, you can leave a comment. We love to hear from our listeners. Also, if you'd like to see how handsome our guests are, be sure to check out our YouTube channel, and that's Commercial Real Estate Pro Network. With that, I want to welcome my guest, Richard. Welcome back to CREPN Radio.
Thank you, Darren.
Well, I'm looking forward to our talk today. And before we get going, if you could share just a little bit about your background with the listeners.
Sure. So for the last 13 years, I've started and grown the Family Office Club. We have 16 full-time professionals on our team. We're usually, when there's not a virus crisis locking down the world, hosting 30 live events a year. Now, instead, we interview at least one investor per day and upload their mandate to our portal and do virtual discussion panels each week and webinars, et cetera. We got about 2,000 registered investors as part of our investor club. And so we're not a conference company. We do host a lot of events, but we don't just do conferences. We don't do consulting. We're really a helpful resource to anyone starting a family office, running one, or anyone who's looking to raise capital from ultra wealthy investors or private investors.
Got it. And just for clarification, can you define what is a family office?
Sure. It's just an ultra wealthy investment solution. So if you're worth $50,000 and you make a mistake, it's not going to cost you that much, probably, hopefully. If you're worth 500,000 or 5 million or 50 million, you can just imagine that not only is each mistake that much more expensive when you're worth $5 million, you're also much more likely to make those mistakes because you have maybe multiple businesses on top of being on a board. More people are asking for your money and your time. You have more employees. So one little selling an asset early or late that gives you an extra 5 or 10% tax, hit might have cost you so much. It might cost you $50,000. That one mistake, you could have hired a full-time person just to help you play defense. So a family office is just playing better defense, managing chaos for you, doing things more holistically, so you can be more proactive on tax planning, on running your operating businesses, and on investing in a smart way.
Got it. Now, you said you've been working with family offices for the last 13 years?
Yes.
Okay. How long have they been a recognized formation for business?
Really the term started being used more in the 70s and 80s on a small scale, but still in the 90s, nobody really knew what the term meant, even in finance. And when I started in 2007, most people I talked to, even in the investment industry, had not heard of them before, and a few had. Now, if you fast forward 13 years, just about everybody in finance and investments has heard of what a family office is, but still most of the ultra wealthy globally have never heard the words family office. They have no idea what it means. Once they learn about it, they want to have a virtual family office or a single family office for themselves, and they want the benefits of one once they hear about it. So we're really at like the third or fourth inning of this industry really growing and becoming an industry in itself.
So the concept is basically, is it not creating some sort of like a corporate structure to your managing your wealth? Is that kind of
Yeah, that could be one way of thinking about it. I think the most simple way is just a 360-degree management of your balance sheet. Anything that touches your balance sheet should be coordinated at the center, because what happens if you don't have a family office, if there's an investor listening to this and you're worth $3, $10, $20 million or much more, you have to remember what your insurance agent said, remember what your CPA told you, remember what you heard on some webinar about tax planning, talk to your wealth advisor, talk to your spouse and next generation. Charitable giving, you might just do by yourself and not coordinate it. You might do a direct investment and do an angel investment or a real estate property. Well, if you knew what percentage of that investment should come from what trust, or you had good estate planning in place, or you had proactive tax planning, you should have that all centralized, because the busier you get, the less likely it is you're going to remember what your CPA told you to do 8 months later when you meet with your insurance agent or you invest in that deal. You're just going to make mistakes the busier you get, because it just gets too complex to keep all in your head.
Got it. So it allows you to just kind of stay on the course, or get a plan and actually work the plan, as opposed to a bunch of fragmented uh, ideas that don't have some sort of central coordination there.
Right,
Seems like
right,
a lot,
for sure.
lot of businesses could probably use that.
Right.
You know, but and then as far as your business model, you mentioned the events and stuff. Um, 30 events normally over the year. Um, what are you mentioned, I guess you're doing daily interviews with
Yes. So the normal events are workshops on investor relations and raising capital, or investor summits, which feature 30 live investors on stage answering questions, discussion panels, and giving talks on stage. And the combination gives those who are raising capital a chance to get 35 different capital raising strategies in a single day at the workshops, but then go to an investor summit and hear from 30 investors in a day and hear all their opinions, their preferred structures, their preferred fee preferences, strategies, etc. And so a lot of people who come into raising capital meet with investors, but they might only meet with 30 investors a month or 50 a month. And by hearing from 30 in a day, they can kind of grow their capacity to work with investors and be more effective working with them. So that's what the Family Office Club is all about. And during this virus crisis, we just are pointing people to the 450 investors we've recorded on video and we have inside the member portal. And then every day we do a Zoom interview for 7 minutes with an investor and go into exactly what they're investing in overall, what they're investing in more than anything else right now, what strategies they want to share with other investors or people raising capital that are listening. And then we upload that to the portal every day. And we share a lot of that, on our YouTube channel and on the Family Office podcast from time to time as well. But we do, that constant refreshing of investor content to the portal is really the main Family Office Club offering.
Got it. And just to be clear, the people you're interviewing, are they the ones raising the capital, or are they the members of the family offices that are looking for opportunities?
So we have both types of members. So if you're an investor who strictly allocates and you're an LP investor or a family office, you're just looking for deals to invest in, then membership in the Family Office Club does not cost anything. If you sometimes syndicate deals, or you're looking for other families to co-invest in your deals, or you're raising capital for a real estate deal, a real estate development company, even if you are ultra wealthy as well, if you're also raising capital, then you need to pay for a membership. And the membership options are at familyoffices.com if anyone wants to check that out. But we have 800 and some paying subscribers on a monthly basis. And then we've got 2,000 registered family offices and investors on the other side.
Got it. So you are kind of the conduit between the two groups, the people with capital and those that are looking to raise capital.
Right. And we're more powerful to each side because of doing both. So some people say, well, which side are you helping? And importantly, we don't take any fees from people raising capital. There's no success fees we take from them. We are just helping the investors get access to the best quality investments, and the investors pay us a performance fee when they invest in something that I help them find through our community. On the other side, the people raising capital, we help them through, we have family office databases, familyofficedatabases.com. We have a free book on capital raising at capitalraising.com. We have our workshops. We review the pitch decks and all the marketing materials of our members once every 3 months. So of the 800 members, usually 25 to 40 a month submit their materials, and we give them 20 bullet points of feedback on what they could change in the materials to be more effective working with investors. So we really try to make our program holistic, in that if someone joins and they consume that content for 18 months and they're part of the community, we're going to really transform how they work with investors, because we're texting and emailing and calling our investors every day. And we represent 81 investors under contract that are more close managed investors. Out of those 2,000, there's 81 that we're working with every day to help access deals and get access to opportunities in our club.
Got it. So let me ask you, so in 2007, and I'm trying to remember exactly when everything blew up. But it seems like 2008, 2009 was really kind of more of the recognized implosion. Um, can you see any kind of similarities in what was going on when you started to these recent times, and just characterize that as to how uh, the ultra wealthy viewed the situation, or perhaps some of your conversations, what are they saying right now?
Sure. Well, it's a good time to invest when things are going bad. So, many of them are taking positions in the stock market. They might be putting, the time we're recording this, the 1st of April, they might be putting, I don't know, it depends on the family. It's not a recommendation to anyone listening, but some of them putting 10, 15, 20% in the market. And then throughout April and May, they plan to be building up their position to maybe be 50, 60%, allocated over the next month or two, expecting that by Q1 next year, there'll be a nice recovery for them, even though they don't know what's going to happen. But also, we sent an email out last Friday looking for 3 types of investments for our investors right now. One is that they're looking for subscriptions at $20 a month and lower that were not hurt by the virus, or maybe they've even grown slightly. So that's something they're looking for, because it's a steady investment and reoccurring revenue is always of interest. They're looking for companies that are doing better than ever right now because their service is in need. And then they're also, willing to be a lifeline to someone who's going to lose their business, and maybe the CARE Act and any other stimulus isn't enough to save their team or save an asset, and they need a lifeline to kind of stay in business or stay afloat. Then there's some investors who want to get access to those types of investments as well. So those are 3 areas that are of interest, but very specifically to real estate, families who can understand the strategy and trust the team is most important. And they're much more likely to do the deal if they're local to the team or local to the asset, of course, and they can get to know it and build the trust in it faster.
Got it. And in real estate investments, are they usually looking to take an equity position, or are they also perhaps open to lending, or is it?
Yeah, they're open to both. I mean, I think a lot of people like income. They liked income a lot near the end of the cycle, and I think they still like it, but they're more questionable about quality of collateral right now when they get an income, opportunity. And they're a little bit hesitant right now until we see the worst of what comes out here in April, I think. But it's still a great time to be planting seeds, getting to know someone, show that you still have a strong team, you still have your head above water in this type of situation, and building relationships right now without the travel that most of us typically do each week. There's more time to be doing, video Zoom calls like this, and, seeing how you could add value and connect people, and also update your messaging and positioning so that you're truly unique in the industry and that you'll attract more investors. Just like you creating this podcast, creating content. That's kind of, part of your question was about similarities between 2007 and 8 to now, because that's when we started our business, was 2007. And when I started, it was all built off of thought leadership, sharing best practices, and that's how we attracted business, because we didn't have a budget to do advertising. So we're going back to that now. We are publishing things every day, multiple times a day, where before we were maybe doing 1 or 2 new pieces of content per week and calling it good. Well, now we're doing 2 to 5, sometimes 7 pieces of new content in a day, for our member portal, for our public website, for social media, etc.
Got it. And when you say publishing content, is there any strategy that you're employing as far as is it basically just information? Is it direction? Is there any kind of an overarching um, strategy with that?
Yeah, I think the most important strategy is something I got from Gary Vaynerchuk, of just don't worry on the quality being perfect. I've got like a $40 Vistaprint thing on the wall behind me. I've got, now I've got this $180 microphone that looks exactly like yours in black. I've got this $40 ring light that makes it so I don't have this weird dark shadow on the side of my face or my window over here, I learned. And there's a little clip-on light for $15 I'm not using today, but for $250, you can get the setup. But for years, I didn't have any of that. It was just my laptop with a white background behind me, just my iPhone when I'm walking down the street, recording something. And I think that thing I got from Gary was that he just documents his journey. So authentically, you can see, hey, I'm just at this asset. We're walking away from this deal because it's not good. Or when I was doing due diligence on a property recently, I walked through and recorded the video of what had been done on the property so my investors could see that, yes, I was there and pointing to the things that they had done. And it's not about the production being perfect. It's just about documenting your authentic journey. And also, Gary often says, who cares that I'm in the back of an Uber? Like, who cares that you can hear a car outside? If you're so worried about the production value, then maybe your content sucks, because the whole point is that your target audience will see the genuine, authentic content, and you're hitting them between the eyes with value that's just for them, and no one else in the world is doing that. And so if you're worried about the environment as your chief concern, you're missing the whole point. The whole point is just to focus on adding that value, and your members would rather hear value than not hear from you because there was a car noise in the background, and so that really resonated with me as well.
Yeah. No, I always enjoyed your, I can't remember how, I mean, it's been a couple of years, but I remember you'd be like in some foreign land and be all of a sudden down a street and walking along with your iPhone there. And I'd go like, wow, cool. I mean, but it was exactly that. It was just kind of like an update, kind of here's what I'm doing. Here's who I'm talking with. Here's some of the questions. Uh,
Right.
and kind of short, but it was topical, and there was value in that. This is probably something that other people are thinking about. Or, I mean, if you're seeing this in an event, it's
Mm-hmm.
likely that other people are having the same kind of questions, and be able to relay that kind of real time, as opposed to some sort of a big thought out production and all that.
Right. Yeah, no, I couldn't agree more. And I think that the thing is, it's more interesting when you're on location somewhere. It's more tangible. You can show someone your oil and gas rig. You can show them walking them through a before self-storage unit and after renovated self-storage unit, or walk the ground where you're going to be developing your piece of real estate, show them the lines on the property and the surrounding traffic that's going by. And I think that just makes it more real. And I stole this strategy from a German banker, because I used to watch his videos on YouTube, and he'd be on the balcony of a hotel in Berlin, and then be on the balcony of a hotel in Paris. And he used to watch this guy's videos, thinking like, man, that guy, must be a pretty successful guy. He's speaking all over the world in these different places. And I realized that it not only makes the video more interesting, but it's like a positioning strategy of authority, or, they must know some things and be very well connected, is kind of like an underlying message of it. And so I think that when I started recording videos, I just realized that even if I'm somewhat monotone in a video, if there's something really cool behind me, plus it has some authority positioning, it takes the pressure off of me to be like Tony Robbins, Mr. Excited Voice person, because it's not really me.
Right. Right. No, that's good. Kind of a storytelling quality there. I used to watch. There was he's still around, Casey Neistat on YouTube, and the guy was just constantly skateboarding through New York City and holding his camera in front of him there, and just like it seemed like a crash waiting to happen kind of thing. But it was just there was just this something was more interesting kind of thing.
Right.
So you mentioned you're talking about content and strategy. Do you have like a core message that you're trying to get to, or is it more about just trying to speak to what you think your identified audience is interested in and expecting to hear from you? Or does that make sense? I mean,
Right.
there's
Yeah, no, it makes total sense. So it's also tricky in my case, because I am trying to be helpful to those raising capital as well as investors. But what I realize is that if I'm helpful to the investors, the more investors I have coming to me, then the more that people raising capital are always going to come to me. So I always have to be serving the investors first. That's why I take the success fees from the investors and not people raising capital, to keep that alignment in place. But I'm always trying to think about, what are the headaches of my investors? What are the complaints when they call me? They say something like, oh, I feel like I'm driving through fog. I don't know what to do strategy wise. I'm not sure who to trust. Or I'll talk about some frustrations that a lot of my clients have, or how a lot of them have lost money that could easily be avoided if I could just share that story. Also talk about just frustrations in the industry and inefficiencies I see. If all of my family offices are doing something and it makes no sense at all, that's interesting. And if 100 family offices that we've helped set up, if none of them had their core values and their mission and their wealth story documented, that's kind of backwards. It doesn't cost anything to do those things. So I like pointing out like golden threads of like what nobody should be doing, and everyone learns not to do those things over time, or what everyone does after they've had a family office for 7 years, or what are really painful, expensive mistakes, or what are some go-to models. So I have these ideas in my head, and then I write them down as a video idea within my project management software. so that when I would go and I travel and I get on an airplane, my goal would be to record 3 videos every time I go to a city. And I'm usually traveling every week when there's not a virus. And, so that way, if I knock out 3 videos when I travel back in before the virus, that was enough content to keep things updated. So I'm sure we could do like a whole hour podcast on just that question you asked me. So I'll stop talking now, but it's a really good question that nobody ever asked me really.
Well, and I think it actually, it goes to the point, and I've heard others speak to this, especially in these times when there's uncertainty, and there are probably some people that are, well, I don't think some people, I think most people are looking for ways to cut costs because of the uncertainty.
Right.
And one of the things I think people would probably lean to cut is those things they can't measure the benefit of. And marketing is always one of those challenging things. Is you unless you put out a coupon or something and somebody direct response comes right in and says, I want to buy because of this, or I want to invest with you, or whatever that is, because they have that one piece and you can do the one-to-one correlation. Now is more of a time to not abandon any kind of marketing message. It's more a matter of a time to stay in front of whoever you're trying to work with, whether it be investors or capital raisers or whatever that message is. So I appreciate you just kind of sharing a little bit about what you're doing and how you're thinking and how you're kind of going back to the basics like you were back in the beginning. Is ramping up the messaging, not hiding or not getting in front of people right now. So
yeah, we're just tripling down on that, and it's what our company was built on, and it's what has been attracting people to us. I just was always so busy traveling. I was like, oh yeah, one day I'll get to the point where we could update social media every business day at least one time, and sometimes 2 times, or one day we'll interview 1 investor per day. And then when the virus hit, we said, wow, what are we going to do? We converted our platform into a digital platform. We've added 40 new members in the last 3 weeks since the virus hit with that new digital offering, and just realized that we really had no other choice but just to add more value. And then even if everyone else keeps on doing their plan, we'll be providing 2 or 3 times the value to potential and current members than we were before through that content.
Do you find the family offices are more receptive to messages? Are they getting more presented to them now?
I think that they're more receptive to things which they've gotten to know the founder and the principals very well, and it has to fit one of those categories of they have a real deep relationship, and now makes it so if something is repriced, they're going to be very smart by reinvesting right now. Otherwise, it has to be something that's doing even better than ever because of the virus, or has not been affected because it's a small subscription, or it's some reoccurring critical service, something like phone lines that people are going to drop their phone lines for a month or 2 just to cut costs type thing. So it depends. I think that things which are now steady and haven't gotten hurt bad, of course, are of more interest. Real estate deals, lenders in some cases have pulled lending at the last minute and didn't come to the closing table. Some people have renegotiated. A lot of investors have balked who had committed to invest, and they're saying, oh, well, now, I refuse to, I don't want to. And so there's an opportunity for investors who like the investment manager to come in and say, okay, well, I'll fill your gap, but I only want to pay performance fees on that extra amount that we're going to invest to help you out. So there's an opportunity there for people to negotiate a bit more right now, in some cases, to get a deal closed that was at the 11th hour already.
Gotcha. And as far as the size of opportunity that a family office might be looking to entertain, can you speak to kind of the range of size that you've seen or that some of your clients regularly entertain?
Sure. Yeah, I think that some investors like the minimum investment size of just 25,000 or 50,000 because it's almost an extension of their due diligence, and it's not super risky. They can get to know someone, see how that deal goes, and then invest more. A really common starting place is a $100,000 investment minimum. I think a common mistake is thinking, oh, I want to go to family office world, so now I'm going to set my minimums at 250 or 500 or even $1 million because now we're just going to raise capital from family offices. But many family offices will look at that and say, well, forget that. Even if we would invest 5 million, we usually start at 300,000. We start at 700,000. So I would just be careful. You can always set up a more sophisticated rule saying first time investors, $25,000. The second time you invest, the minimum is 100. And then if you need to, you could always say by the third or fourth time, there's a higher minimum if you're doing things deal by deal. But I haven't seen anyone do that, honestly. I've looked at 350 pitch decks from our members. We review those every quarter for them. And no one has that type of a minimum schedule. They're all either at 100K or 500 or 1 million. And I've seen one at 25,000 that's well established. They manage 400 million, and everyone tells them they're crazy to accept 25,000 per investor. But they say we don't care what they say because we're raising 100 million a year right now. And they have one investor at 150 million, and they have many investors who have 1 to 2 million with them, and they started them at many of them at 25,000. But they're doing several deals a year, so they're able to test them out. Okay, yeah, we like you guys. Then they put in 250,000. Then they put in 500,000. So I always like doing, like Dan Kennedy is famous for saying, if you're not sure what to do, just do the opposite of everyone else. And while everyone else tries to go into the family office world with high minimums, thinking that's the way to go, I like to, do the opposite when possible.
Now that's really some great insight there. I think that the average capital raiser sees the family office as like the golden goose, and thinks if they can just get the audience, that that's the chance to land the big fish kind of thing. And what you're saying is that just as an opportunity to kind of create and nurture that relationship, if you let them in at a smaller price, and like you even said, like it's kind of the cost of due diligence almost. That's me.
Right.
That's great. I mean, I hadn't heard that before, and I am so appreciative of you sharing that, because it's funny how I go back to what was it, the Millionaire Next Door book about the perception of wealth and what people think the person is, and what they've got, and who they are, versus
Mm-hmm.
the real underlying core beliefs, or who they really are, the fabric that they come from, kind of thing. So that's
Right.
great. That's great. Richard, if we could for a minute, I'd like to shift gears here. As I've mentioned, I'm an insurance broker by day, and we do risk management. There's a couple of different strategies we look to. The first is, can we avoid the risk? The second is, can we minimize the risk? And if we can't do either of those, can we transfer the risk? And that's what an insurance policy is. And I like to ask my guest if they could consider what the biggest risk is. And just for clarification, we're not necessarily looking for an insurance related answer. But if you would, I'd like to ask you, Richard Wilson, what is the biggest risk?
For my company, even though we have good managing directors, I think the biggest risk is myself. I'm driving forward a ton of the new content. When I hang up here, we're doing a 1,000-person webinar, and I've got someone on my team that could do a webinar on many different topics, but not the same topics I could, fluidly. And so it's kind of like a key man risk in our business. Would have to go down to a skeleton crew if I got hit by a truck this afternoon, and move forward as a much smaller business. So I think it's just like many entrepreneurs, getting yourself out of your own way and making sure you're not the bottleneck to growth, and making sure that you've got kind of a C-level team being groomed and built is part of that, but also just thinking through things, that are insurance related, honestly related to key man or life insurance, or just, if you're disabled and can't work for a while. Because I just think that, like most businesses that are like mine with, 15 employees, you're trying to grow into a medium-sized business from a small business. You're in that in-between world where, you're constantly just trying to push stuff down to the team and get a better quality team.
Got it. No, that's insightful, and I think it's true for most businesses. Is that just a reminder of if you don't let people do and grow and become more in the business, and kind of own that position, it is easy to become that bottleneck, or kind of restrict the growth, kind of thing. So I appreciate you sharing that.
Mm-hmm. Sure.
Richard, where can the listeners go if they would like to learn more or connect with you?
Sure, pretty simple. Familyoffices.com is where there is details on the charter membership and the Family Office Club. We also have links to a lot of resources like our free book on family offices, etc. And in addition to familyoffices.com, if you're strictly an investor, not someone raising capital, but just someone looking to allocate to deals, we serve 81 clients that are all investors. And it takes about 5 minutes to become an investor client by registering on privateequity.com. So if there's an investor listening, privateequity.com would be the right portal. But for anybody, familyoffices.com is kind of the central hub with all the resources there and options to get involved.
Got it. Hey, Richard, this has been an absolute pleasure. I can't say thanks enough for taking the time to talk again today. And I hope we can do it again soon.
Yeah, I hope so too, Darren. Thank you so much.
All right. For our listeners, if you like this episode, don't forget to like, share, and subscribe. Remember, the more you grow, excuse me, the more you know, the more you grow. That's all we've got this week. Until next time, thanks for listening to Commercial Real Estate Pro Network's CREPN Radio.